Moving money from your business to your pocket often feels like stealing. You see the balance, but you freeze. Is that actually profit or is it tax money? Get this wrong, and you risk accidentally wiping out your company. To pay yourself as a business owner without the fear of surprise tax bills, you have to stop guessing. You cannot safely pay yourself if you don't know your true profit, and checking your bank balance doesn't count. Your bank balance is a liar. It tells you what is in the account right now, but it doesn't tell you about the $4,000 tax bill due next month or the subscription renewing next week. This is why I've partnered with Xero for this video. They're an all-in-one cloud-based accounting software designed for small businesses. It acts as the brain for your business finances, giving you actual clarity instead of just a cash balance. To pay myself safely, I ignore the banking app and look at the profit and loss statement inside Xero. It gives me a clear picture of if I'm actually profitable this month or if that cash is already spent. When you make the transfer, Xero makes tracking it effortless. You can categorize that transaction as an owner's draw right from the reconciliation screen. This keeps your books clean so you don't panic during tax season. And if you're at the stage where you need to run an actual salary, Xero helps automate the compliance work so you don't drown in paperwork. So if you want to stop guessing with your money, as of the time of making this video, there is a massive offer for 90% off for 6 months for you guys. I put the link in the description. Check the terms, grab that deal, and get your financial house in order. Method 1. The owner's draw. Now, let's look at the first method, the owner's draw. If you are a sole proprietor, a partner in a partnership, or a single member LLC, the IRS views you and the business as the same entity. Here's how this typically works. Owners in this category usually do not get a formal salary. They don't typically pay themselves via a W-2. They simply take the money. An owner's draw is just a transfer of funds. It's writing yourself a check or transferring money from your business account to your personal account. Now, it sounds simple, but here's a trap. No taxes are withheld. When you transfer $5,000, you get $5,000. But that money is not tax-free. Generally, at the end of the year, you owe the taxes on the business's total profit, even if you left the money in the business accounts. A safe rule of thumb, every time a draw is taken, typically you want to immediately move a percentage, usually 25 to 30%, into a separate savings account for taxes. The goal is to not touch that money. It acts as a holding tank until quarterly estimates are paid. Method 2. The salary. If your business has grown and you have elected to be taxed as an S-Corp or you're running a C-Corp, the rules change completely. Here's the reality. You're no longer just an owner. You're also an employee of your own company. This means the owner usually must be on payroll. They receive a salary, taxes are withheld from every paycheck, and they get a W-2 at the end of the year. The general guideline is that this salary needs to be reasonable compensation. The salary typically needs to match what you'd pay a stranger to do your exact same job. This method requires more admin, but it provides stability. Personal taxes are paid automatically throughout the year, which helps avoid being hit with a massive bill in April. And this is where using a tool like Xero is critical. It connects with payroll apps to automate these calculations to help ensure withholding isn't messed up. Method 3. The hybrid. This brings us to the strategy many business owners aim for, the hybrid model. If you are an S-Corp, the usual approach is you pay yourself a reasonable salary first. But if the business is highly profitable, the remaining profit can often be taken as a distribution or draw. Here's why people do it. Distributions are generally not subject to the 15.3% self-employment tax. Income tax is still paid, but there are potential savings on the Social Security and Medicare portion for that specific chunk of money. However, a distribution cannot generally be taken instead of a salary. It must be in addition to a reasonable salary. If an owner tries to pay themselves a $0 salary and take $100,000 in draws to save on taxes, that is often a major red flag. How much should you pay yourself? We've covered how to move the money, but how much should you actually take? Well, there's a constant tug of war between what your household needs and what your business needs. If you take too much, you starve the business. If you take too little, you burn out. Here is a simple framework to find your safe number: the operating buffer. Calculate your fixed business expenses. Ideally, you want to leave enough cash to cover these, plus a rainy day buffer, usually 30 to 90 days of operating costs. The tax wedge. As we discussed, the standard practice is to subtract your tax percentage first. Reinvestments. Are you buying new equipment or launching a marketing campaign soon? Keep that cash in the business. Owner pay. Whatever is left is what you can safely pay yourself. The consistency principle. One final rule to live by: avoid the feast and famine cycle. Just because you can take money out whenever you want doesn't mean you should. In the early days, it is tempting to drain the account during a good month, but then a slow month hits and the stress kicks in. The fix is usually to simulate a salary, even if you're just doing an owner's draw. Pick a consistent number, say $4,000 a month, and transfer that exact amount every 2 weeks, regardless of how high sales were. If the business has a killer month, let the extra cash build up in the business accounts. This creates a rainy day buffer that allows you to keep paying yourself even when sales dip. Now, ultimately, learning how to pay yourself as a business owner isn't just about enjoying your profits. It's about validating that you have a viable business. If the business cannot afford to pay you for your time, you typically don't have a business. You have an expensive hobby. Get your tracking right. Use tools that make clarity automatic. Special Zero offer. Get 90% off for 6 months using this link. Terms and conditions apply. Stop guessing. Start paying yourself what you're worth. Thank you so much for watching, and I'll see you in the next one.